energy prices, in case you haven't noticed, ending what had been a very strong week on a sour note. Crude oil falling 2% today. The fact that China didn't provide a growth target for the year not helping expectations for fuel demand. BK is seeing some prices approach some key levels. So show us what you're looking at.
Yeah, it's kind of interesting, Melissa, when you look at this. You look at, oil is now approaching, at least on Brent, if you kind of take a look at that, because the WTI charts are a little screwed up because of those negative prices. But you look what happened with Brent crude. We're back at the levels that we had from the March 9th, 10th, that price war when we came over the weekend and all of a sudden Saudi Arabia said we're going to pump as much as possible. So we're back up at those levels. Now, when I look at gaps like that or any type of technical levels, to me, they're like it's a map, right? It's a signpost. Are we going to have a U-turn here or is it going to be an S-curve? So I look at it and say, you know what? The economy isn't getting any better. If this starts to roll over, to me, there's more signal in commodity prices and even copper prices than there are in stock prices about what the economy is going to be doing, because the central banks aren't buying commodities. They're buying equity equivalents.
Jeff Mills, what's your take?
Yeah, well, to BK's point, I mean, it's not just oil, right? It's other commodities. And I think it is indicative of what's going on with global growth. In terms of oil and our exposure in energy, I think I've said it on the show before, but we don't really have a great edge in predicting the direction of the commodity. Given my view on global growth, obviously, I think it's probably sideways to down. But we do have some exposure in energy, and we would rather be further from the well, so to speak. So we like names like ExxonMobil, more of the integrated oils with reasonable balance sheets, solid dividends. So if you want exposure in that space, I would much prefer names like Exxon in the integrated space than something that's more exposed to the commodity. But overall, I think watching the commodities, to BK's point, it makes a lot of sense because they're sort of trading on their own and they're trading on their own supply-demand dynamics. So it could be a good tell as it relates to what's going on globally with economic growth.
Where would you go on the equity side of it, Mike, for oil?
Well, it would definitely be, Jeff was talking about the integrated. I think you want to be downstream. That's marketing and refining. And obviously, a lot of the midstream companies were very hard hit. The North American midstream companies were very hard hit. And I think that some of those might actually be a better play than was being priced in at the depths of it. But of course, they're making a good point. The thing is that oil is trading on fundamentals. It's not really a technical issue here. Where can the oil go? The central banks aren't buying oil because where are they going to put it? You can't put that on your balance sheet. You need storage to store oil. They don't have it. Nobody does. We continue to see elevated production, and we're not seeing consumption keep up with it. That's going to continue to put a lot of pressure on it. And if you take a look at the curve, the futures curve for oil, it's extremely, extremely steep. That is generally a short-term bearish condition reflecting gross oversupply, and that's exactly what we have.